Welcome back, viewers. You're watching Business at 9. Tata Motors PV has reported its first ever quarterly earnings post the demerger of Tata Motors. While reported profit for the quarter stood at 72,349 crore, the company also had an exceptional gain of 82,616 crore on the disposal of discontinued operations. Without this one-off, Tata Motors PV saw a loss of 6,368 crore. Srishti here joins us with all the number crunching.
So the key highlight of Tata Motors PV division numbers this time is the cut in the JLR guidance, wherein earlier for the EBIT margin guidance for the JLR in Q1, amidst the challenging times, the decline in the volumes, the management did stick to the guidance of around 5 to 7%. But in Q2, that has been revised lower to 0.2% right now. And along with that, with respect to the free cash flow, there has been a guidance revision there as well, because for the full year of FY26, they were targeting to have a zero figure on this particular aspect. But that has been now revised downwards, and they are expecting a free cash outflow of around 2.2 billion pounds in the range of 2.2 to 2.5 billion pounds. So that's the big key takeaway coming in from Tata Motors numbers. And this time around, the clear pressure coming in from the numbers is from the JLR division on the back of the cyber attack. Along with that, the tariff related uncertainty and the decline in their volumes is what the company has been witnessing. All these factors did come together at once in Q2, and that impacted the numbers, and especially the JLR performance, wherein the EBIT number in terms of the margin is now in negative, which stood at around 8.6%. In terms of the consolidated numbers, the reported number you will see on the bottom line, that will be a profit figure, but tell you that there's an exceptional gain of 82,616 crores on the disposal of the discontinued operations. And adjusting to that, the bottom line is in the loss figure. Adjusted loss stood at over 6,000 crores versus a profit of 3,521 crores. In terms of the top line as well, there's a decline, but not much, wherein revenue has been clocked at 72,349 crores. So JLR is one of the clear pressure points for Tata Motors PV division, but the India business has showed very good resilience, a very good margin improvement from 4% EBITDA margin in Q1. This number now stands at around 5.8%. So good performance, obviously, on the back of the GST reset, and now the company has also gained the Vahan #2 market share in a couple of months. But the overall commentary looking ahead is a bit positive, where they say that they expect all-round improvement in the performance in the second half. Overall global situation remains challenging, but they are focusing on to stabilize the production as of now. So that's about Tata Motors PV numbers.
Well, thank you, Srishti, for getting us all those details. Let's in fact also listen in to what Shailesh Chandra, the MD and CEO of Tata Motors PV, had to say in the earnings call.
We do expect to see production to ramp up. So right now, between now and end of the year, the entire focus is to keep the production rates up, and we are now starting to hit our full rate of production now. But we will not be in a position to catch up on the lost production weeks in the rest of the year. And therefore, that's the reason you're finding the Q3 will be a weak quarter, and then Q4 we should get back to full normalcy in terms of numbers, which were trending quite well till August. So that's how we see the year play out. So it's just mathematics of the various quarters, which is what we are now calling it out, since the numbers are now clear, and we have revised the guidance downward. And that's what we hope to improve upon as the production stabilizes.
And some big update coming in from the world of technology. The government has notified the final DPDP rules. The rules, of course, include setting up and appointing of a